It's late at night. You're filling out a loan application on your phone, and you finally reach the last screen. The app asks you one simple question. Please tell us why you need this loan. Most of us pause here, carefully choosing our words, assuming a human being is going to read this and understand our situation. Historically, lenders evaluated your worth entirely through hard numbers. They verified your identity, looked at your salary slips, and checked your payment history. But those traditional metrics contain a structural blind spot. They only record what you've already done. A perfect payment history offers zero insight into whether a sudden life event might cause you to default tomorrow. To predict future bankruptcy, modern financial algorithms have shifted their focus. They stopped looking strictly at your wallet and started analyzing the exact words you type. Lenders now use that text box as an active, invisible financial interrogation. We know how this works because of research by Kriebel and Stitz. They analyze data from major peer-to-peer lending platforms, like Lending Club, to see how algorithms process user-generated text. They took thousands of personal loan descriptions written by actual borrowers and fed that raw text directly into deep neural networks. The technology driving this analysis relies on transformer models, specifically architectures called BERT and Roberta. These represent the same foundational technology used by ChatGPT. This diagram shows how a transformer processes a sentence. Older language models would simply count specific keywords, but transformers map the structural and contextual relationships between every term simultaneously. The researchers trained this network by cross-referencing those contextual word clusters against historical records. The model identified the syntax of the people who eventually paid their debts and compared it against the phrasing used by those who defaulted. By doing this at scale, the AI learns a hidden language of financial desperation, patterns of speech and syntax that human loan officers cannot detect. Take this hypothetical loan application. I need to consolidate my medical bills after an unexpected surgery. A human loan officer reads this through a lens of empathy and logic. They see circumstantial need and a highly understandable reason for borrowing. Now, watch how the AI processes that same text. It strips away all emotional meaning, dissolving the sentence into a data array that weighs syntax structure and sentiment scores. Within that array, the AI extracts what researchers call novel risks. It flags subtle signals of instability embedded in the phrasing, combinations of syntax that traditional financial metrics miss. The empirical results show that deep learning models applied to borrower-generated text significantly outperformed standard financial data in predicting defaults. The algorithm ignores the narrative you provide. It converts the way you construct your sentences into a quantitative probability of your financial failure. Your vocabulary, your syntax, and your typing habits now function as a shadow credit score. This dynamic extends far beyond consumer loans. Right now, large language models are scanning speeches from central bank officials, hunting for linguistic signals to predict shifts in global monetary policy. The same sentiment analysis technology digesting your loan application powers billion-dollar algorithmic trading strategies across Wall Street. This creates a transparency problem known as the black box effect. The internal logic these models use to weigh variables is so dense that humans cannot fully map it. If a traditional bank denies you credit, you can ask to see your file and correct a mistake. If an algorithm denies your loan because it didn't like your sentence structure, it is impossible to appeal. The machine cannot explain its reasoning to you. Regulators are facing friction between unauditable AI decision-making and strict financial compliance laws, which require transparent, auditable records. The days of relying on a clean numerical credit score are over. Every keystroke is now a quantified financial liability.